Imagine a world where you can attend a concert, buy a house, run a business, and trade stocks all without leaving your home. A world where virtual and physical realities merge, creating new opportunities for entertainment, commerce, and investment. This world is not science fiction, it is the metaverse, and it's rapidly evolving into a billion-dollar economy. The metaverse represents a convergence of gaming, social networking, cryptocurrency, and virtual reality. More than just digital playgrounds, these immersive environments are becoming serious marketplaces where users spend real money, trade virtual assets, and create entirely new business models. As technology advances, the metaverse economy could redefine wealth, value, and commerce in the 21st century. But with opportunity comes uncertainty. How sustainable is this digital economy? Who will control it? And will virtual worlds really become the next financial frontier? Let's explore the forces, innovations, and challenges driving the metaverse economy. Understanding the metaverse. The metaverse is not a single platform, it's an ecosystem. Platforms like Decentraland, Roblox, Fortnite, and Meta's Horizon Worlds offer different experiences, but all share core principles: immersion, interactivity, and digital ownership. Users can buy virtual land or property, trade digital goods or NFTs, participate in virtual events and experiences, build businesses or services inside these worlds. The metaverse economy is fueled by digital currencies, NFTs, and tokenized assets. This allows real-world value to flow into virtual spaces, creating a financial system that operates alongside traditional money. As participation grows, the metaverse evolves from niche gaming into a full-fledged marketplace, attracting investors, entrepreneurs, and corporations. Virtual real estate, the new gold rush. One of the most visible aspects of the metaverse economy is virtual real estate. Digital plots of land are bought, sold, and developed just like physical property. Some users pay thousands, even millions for prime locations in popular virtual worlds. These spaces are monetized through advertising, event hosting, virtual shops, and marketplaces. Social experiences. Developers and entrepreneurs create value by designing immersive environments that attract users. Just like in the real world, scarcity, location, and usability determine the price. Virtual real estate is speculative, but it is also functional. Brands like Nike, Gucci, and Samsung have opened digital stores, showing that virtual commerce can generate tangible revenue. The metaverse turns pixels into property and imagination into investment. 3. NFTs and digital ownership. Non-fungible tokens, or NFTs, are the backbone of digital ownership in the metaverse. They allow users to claim unique assets, art, avatars, clothing, collectibles, and even land. Unlike generic digital files, NFTs are verifiable on a blockchain, making ownership transparent and secure. NFTs create value by offering authenticity and scarcity, tradable, digital assets, integration into gaming and social platforms. This system gives creators unprecedented economic power. Artists, designers, and developers can sell directly to a global audience, bypassing traditional gatekeepers. NFTs turn digital creativity into tangible revenue, fueling a rapidly expanding metaverse economy. Virtual commerce and entrepreneurship. The metaverse is more than entertainment, it's a marketplace. Users can open virtual shops, sell digital goods, or offer services, earning real money. Digital fashion, virtual concerts, and immersive experiences are monetized in ways that mimic real-world business models. Entrepreneurship in the metaverse is innovative. Game designers create experiences that attract paying users. Brands launch limited edition virtual products. Virtual influencers and performers monetize audiences. The metaverse economy rewards creativity and agility. Unlike traditional businesses, the barriers to entry are lower, but success depends on engagement, quality, and community. Cryptocurrency as the fuel of the metaverse. Cryptocurrencies power transactions within the metaverse. Platforms often have their own native tokens that users employ for purchases, rewards, or governance. Some tokens also have real-world value, allowing users to cash out or reinvest. This integration of crypto bridges virtual and real economies. It enables seamless transactions, global accessibility, liquidity for virtual assets. Crypto adoption in the metaverse creates a self-sustaining economy where value is generated, transferred, and reinvested entirely in digital spaces. It's a paradigm shift in how money flows. Corporate adoption and brand investment. Major corporations are entering the metaverse, investing millions to establish virtual presence. Companies see opportunities to engage younger audiences, create immersive marketing, and experiment with virtual products. Examples include fashion brands launching NFT collections and digital clothing, entertainment companies hosting concerts and fan experiences, tech firms offering virtual workspaces and collaboration tools. Corporate investment brings legitimacy, liquidity, and scale. It signals that the metaverse is not a passing trend, it is a serious financial frontier. Gaming as a gateway economy. The metaverse grew out of gaming, and games remain its primary economic engine. Platforms like Roblox and Fortnite generate billions in revenue, primarily through virtual goods, subscriptions, and experiences. Gamers are accustomed to virtual economies, earning, trading, and spending digital currency. This familiarity lowers the barrier for broader adoption of the metaverse as a financial ecosystem. Gaming provides proof that digital worlds can sustain complex, lucrative economic activity. The role of social interaction. The metaverse economy thrives on community and social engagement. Unlike traditional markets, value in virtual worlds is often derived from participation, collaboration, and social influence. Events, concerts, and virtual hangouts attract users and increase demand for digital assets. Social networks in the metaverse create opportunities for monetization, sponsorships, ticket sales, and virtual experiences. Communities drive adoption, and adoption drives value. In the metaverse, human connection is directly linked to economic growth, speculation, and market volatility. Like any emerging economy, the metaverse is speculative. Prices for virtual land, NFTs, and tokens can soar or collapse in weeks. Early adopters often profit from speculation, while latecomers face significant risk. Volatility is both a challenge and an opportunity. It draws investors seeking high returns, but can deter mainstream users who fear losses. The next decade will likely see the market mature, with more stable platforms, regulation, and safeguards reducing extreme swings. Regulation and legal considerations. The metaverse exists in a gray legal area. Ownership rights, taxation, intellectual property, and fraud are ongoing concerns. Governments and regulators are beginning to address these issues, but rules vary across jurisdictions. Regulation could stabilize the economy, increase trust, and encourage broader adoption. However, overly restrictive rules could stifle innovation. Balancing oversight with creativity will be a key challenge in the next decade. Integration with traditional finance. The metaverse does not exist in isolation. Traditional finance is increasingly connected to digital worlds. Banks, payment providers, and investment firms are exploring ways to bridge fiat and crypto, enabling users to move assets between virtual and real economies. This integration could make virtual worlds more accessible, secure, and scalable. It also opens the door for investment products, loans, and financial services tailored to metaverse participants. Traditional finance may provide stability, while the metaverse provides growth and innovation, employment, and economic opportunity. The metaverse is creating new career paths. Digital architects, NFT artists, virtual event planners, and community managers earn real income through work in virtual worlds. This represents a shift in the nature of work. Location-independent employment, monetization of creativity and social influence, peer-to-peer economic opportunities. The metaverse allows people to earn in ways impossible in the physical world, democratizing access to economic growth. Environmental considerations. Blockchain-based virtual economies consume energy. Mining, transactions, and token creation have environmental impacts. As the metaverse scales, sustainability becomes a concern. Developers are exploring energy-efficient protocols, proof-of-stake systems, and carbon offsets to minimize environmental harm. The financial future of the metaverse will depend not just on profit, but on responsible resource use. Risks and challenges ahead. Despite immense potential, the metaverse economy faces challenges: security vulnerabilities and hacking, fraudulent schemes and scams, market speculation and bubbles, regulatory uncertainty. Addressing these risks is crucial for long-term growth. Investors, users, and developers must navigate uncertainty while fostering trust, transparency, and security. The next financial frontier. The metaverse represents a paradigm shift in how economies operate. Digital assets, virtual commerce, and social engagement create a new class of financial activity. The next decade may see the metaverse evolve into a parallel economy with real-world implications, asset ownership and investment opportunities, new markets for goods and services, innovative career paths and economic participation, integration with global finance and traditional markets. The question is no longer whether the metaverse is a novelty, it's how quickly it will become a major economic player and whether it can sustain growth responsibly. A virtual world with real consequences. The metaverse economy is more than pixels and avatars. It is a complex financial ecosystem powered by crypto, NFTs, and virtual entrepreneurship. It challenges traditional finance while creating unprecedented opportunities for commerce, creativity, and investment. Success in the metaverse will depend on adaptability, innovation, and trust.